So I'm going to take you through today a presentation tailored to an announcement that we put out yesterday. So if you want more detail from what I'm going to talk about today, we did put an announcement yesterday going through basically a corporate update and our goals for 2023. So I'm going to try to tailor this today to give you some information regarding that announcement and some of the backup to why we're talking about that. So E3 Lithium is a lithium from brine company. In Alberta, we're leading the charge on developing the Western Canadian brine assets. We've been around since 2016, public 2017, went through this sort of slow market into the 2018 to 2020 range, and came out with a technology and with a resource that is now leading the charge. So what the announcement really was about yesterday, and what we're really trying to exemplify is this path to lithium and how imperative it is for a company like us that as advanced as we are to move as quickly as we possibly can into the lithium production and into the revenue generation area. And there's lots of advantages and lots of rationale why a company like us should be moving in that direction. And I want to talk to you today about how we're going to do that. So just a couple of key things. We have a leading technology, DLE technology, which I can answer questions on afterwards on technology specifically, because I'm not going to go in it during this presentation. We also have one of the largest resources on the planet, 24 million tons in total, but our Bashaw district is 23 million tons LCE inferred, and that puts it in the upper echelon of size range for global deposits. I just want to go through our milestones, and I think the milestones are really important because they set the stage for what we're going to accomplish. And if you look at our DLE peers that are more advanced than us, and we have a slide on our slide deck and on the website that you can find looking at the valuation comparables between us and our peers. The things that have created big value for these companies are the milestones that we're about to accomplish in 2023. And we've spent the last 2 years gearing up to get these milestones done. Fundamentally, and one of the big ones that I'm really excited about, which is the most imminent, which is in Q1, is the measured and indicated upgrade. So we have an inferred resource in the brine direct extraction space. We're about to upgrade that to measured and indicated. Will be one of the largest, my prediction is one of the largest of M&I resources for direct extraction that we're about to announce. So that's coming imminently. And that leads us into the next big milestone, which is the pilot plant. And it is probably the biggest milestone that a company like us, especially in the direct extraction space, can accomplish, which is demonstrating the technology at a scale and size that enables us to design a commercial facility and demonstrate the technology works as we expect it will, with real brine coming out of the deposit in real time. And so we announced in January that this is on track to start operating in Q3, and most likely in the earlier part of Q3 of this year. So we've got some milestones there as well listed so you can follow along and see us progress as we get closer and closer to the pilot. Then we'll operate the pilot, and then we'll be putting out results. One of the key things we're going to be doing is outlining our KPIs for what the pilot should operate like, so that when we put our results out, they make sense to the market. And that's going to come prior to us starting and turning this thing on. While that's happening, we're also going to be producing lithium hydroxide. A big advantage of that is that we're demonstrating it with known proven technology, and I'll talk to you about why that's important in a bit. But the side benefit to that is being able to provide those samples to potential customers to start that customer discovery, which is very important because one of the things that also has created a lot of value for our peers are signing offtake agreements. And one of the ways to get those is to advance your project, and others to provide samples of your hydroxide to those companies. All of this culminates in a pre-feasibility study, booking one of the world's first direct extraction reserves, hopefully by the end of this year. So it's a big goal for us. That has already started. We're already headed down the track on that. And a lot of the work we're doing internally right now, we've got a team of 30 people, which I think is really important to get to that end goal. And so as I mentioned, getting to first lithium as quickly as we possibly can is a very important goal for us. How we're going to do that is really important. And I think the strategy behind that is fundamental for a company like us because it guides our direction. And right now, because we've started the pre-feasibility study, a lot of the decisions that go into this are being made today. And those decisions come around to using, and a fundamental thesis to this announcement and to what we're doing right now is using the lowest risk commercially available solutions to build this processing facility that we possibly can. Now, obviously, direct extraction is a piece of the story that is being developed right now. The first direct extraction plant outside of China is likely to be operating in the Salton Sea by a company called Energy Source. That is expected to be operating later next year. You can go on their website and you can get more details. I'm not an expert on their technology, but they will be probably one of the first to prove out direct extraction at the scale E3 is talking about as a first phase, which is around the 20,000 ton per annum. So when you look at the other two sides of this, which is producing the brine and making a lithium hydroxide product, again, looking at the market and looking at the landscape of how these technologies are out there and what we can use. The brine production, we can deploy conventional oil and gas drilling techniques, downhole pumps, pipelines, and everything that Alberta is known for doing in conventional oil are directly applicable to this project. So we can use the same drill companies that the oil and gas companies use. The service companies, they're all based out of Red Deer. Red Deer is a 20-minute drive from our first project site. So we have the available workforce to deploy to get this project built, both from a drilling and pipeline perspective, but also this facility looks like a water treatment facility. We've built these same types of facilities, water treatment facilities in Alberta at this same size range in SAGD in northern Alberta. So we understand how to build that piece of it. When you look at the direct extraction, even that has a bunch of known processes, because direct extraction is just a water treatment process used to extract elements from water. And we have developed a sorbent that is selective for lithium, and that is what is new, and that is what is novel to E3, is the selectivity of lithium. But the processes that wrap around this are well understood, and we are using companies who have designed and built similar systems to help us design and build ours. And I think that's fundamental to the understanding. Now, the chemistry of the material is what is, we hold, proprietary, but the industry at large, and I mentioned Energy Source, the industry is de-risking direct extraction technologies very quickly. There are probably more direct extraction technology companies than there are resource companies in the world today. So the technology is coming very quickly. So even if E3 didn't have a technology, we could probably find one on the market today that would be applicable. Then the last piece of this is lithium conversion. There's lots of new and sexy ways to make lithium hydroxide in this plant using electricity, using ion exchange. But if you want a low-risk, proven process, you're using chemical conversion that is readily available in the market by being built by big companies who have been built before, like Veolia, the Veolias of the world, or Whiting and those sorts of guys. So those companies can design and build a very similar system for us that's being deployed elsewhere in the world for lithium conversion. So when you pack that all together, there's actually not that much new and novel about what we're doing. We're just smashing those pieces together into a process flow sheet for us to use. And if we do that effectively, we can move this into production by 2026. And the advantages there are extreme. And what we need to do that is obviously the team. So we have 30 people on staff today. A large amount of them are project engineers and process engineers who have built facilities of this size in Alberta already before in their careers. And we're bringing them on staff now to build a facility for E3. So that projects team that's working on the pre-feasibility study is obviously being designed in intimate detail by an EPC firm, but they're managing it for us. They will roll it into feasibility if the PFS is successful at the end of this year. We roll right into feasibility next year, right into detailed design. And while that's happening, we work on the permitting side of things. And I'll talk to you about permitting in a second. So a very experienced team that's going to get this project going. And so if we're successful this year and we get the pre-fees out and we like it and we're ready to move on, we go into the detailed design, we go into project financing, and we go into permitting. That takes about a year to year and a half, and then we go into construction into 2025, operating a 20-ish thousand ton plant in 2026. So by the end of 2026, having that plant operating and at nameplate. So the advantages, why is E3 pushing this so hard? Number one is the price. If you look at the supply-demand deficit that's coming, so right now prices have come off from a 70 to 80,000 ton high. They've come off to, say, 65,000. The reality is we did our PEA that outlined a $1 billion project at 14,000. So prices coming off to $65,000 is not really that big of a deal. Prices are not expected to drop that much lower and they are you're probably going to see them continue to decline this year. And then we go back into deficit, and that deficit is predicted to extend into the late 2020s. And the real deficit happens in 2026 to 2027. And this is Fast Markets data. This is not E3's data. And what that means is that the prices that you're going to see for lithium are going to be the highest, most likely, in around the 2026 to 2027 timeframe. So number one, reason for E3, the price that we'll get for this lithium will allow us to pay the plant back quicker and allowing us to move into the second phase and expansion much more quickly. And so we'll sacrifice, therefore, the lower risk, maybe slightly less efficient process designs to get us revenue faster. Because obviously any revenue is better than no revenue, especially when that revenue is paying the highest prices you'll probably see in the market. Another good reason is what you've seen lately is GM, LG, Chem, and Ford invest big dollars in lithium players that are near-term producers. And I don't expect a type of investment from that to E3 for a little while, but there is a window where those companies are paying that type of premium to get access to the lithium resources because they risk having a battery plant and a car all ready to go and no lithium for that plant. And that is why they're getting in. Like GM spent $650 million investing in Lithium Americas Corp. Thacker Pass project in Nevada to ensure they had supply of lithium for the GM fleet. And that type of deal, again, is only going to happen while the shortage of lithium is there. Once everyone has secured their supply through this deficit period of the late 2020s, those types of deals will go away because the necessity of them will no longer be there. But in the short term, they are there. And we are probably in the top 5 in terms of time frame to get lithium into production in North America. And so we need to hold true to that time frame because that means that there's an opportunity for E3 to capture capital investment to build our process facility like there's never seen in the mining industry before and probably won't again. So we're chasing that window. The other opportunity is grant funding. Right now, and E3 has been very successful. We've got $27 million from the federal government. We've got $2 million from the provincial government, and there's potentially more even to come from the Canada side. And then there's also the DPA IRA funding through the Department of Defense that we are being told by all levels of U.S. government can flow into Canada at the right time. And that right time is the completion of your pre-feasibility study with an offtake agreement that shows that the lithium stays into the North American supply chain. So we get those two pieces. There's even government funding from the U.S. available. So all of those things mean low risk, reducing the risk of us going to commercial operations. And then you look at the size of this resource. One of the other advantages is that we have so much available in our hands. We have 23 million tons in the orange blob on the right. Those 23 million tons enable us to be able to produce not only our own project, but potentially joint venture pieces of this project off and still become one of the largest lithium producers on the planet. We believe that there's enough brine resources in the ground here to produce 3 to 4 plants producing between 50 and 70,000 tons. And what that means is somewhere between 200 and 300,000 tons of lithium production per year for up to 50 years. That's the size potential that this thing has. So even if we joint ventured a small piece of this away, we would have more than enough for E3 to be still one of the largest lithium producers while having a joint venture with a company. One of our partners is Imperial Oil, Exxon, which is a subsidiary of ExxonMobil. They are a 5% shareholder of the company. The oil and gas companies are looking at this very, very closely. Really quickly on Alberta, just today announced something called Directive 56 was brought into law today. Directive 56 is what oil and gas companies use to license their wells, their pipelines, and their facilities, which are the 3 licenses E3 will require to be commercially operating. They rewrote that directive and included brine-hosted minerals, which is what we qualify under Alberta law, into that legislation. So now in law, there is a permitting path for E3 to move our project into commercial operations. These licenses take between 12 and 18 months in total to get. And it's a well-known, well-established regulatory framework that's been around for 60 years, and anyone in the world can go to the Alberta Energy Regulator's website, download this directive, and understand it. So that regulatory certainty that we saw the draft in the fall, we knew it was coming, just brought into law today. So that's huge for us to be able to have a clear path to permitting and regulatory. Obviously, direct extraction is a big ESG benefit because it uses very little land. There's no open pit mine, there's no solar. We also don't interact with the freshwater aquifer, so we have a very strong ESG story to tell, which I think is very important for our customers. Quick snapshot on the PEA value. You can look at this on the website. We're redoing this right now with the pre-feasibility studies, so by the end of this year, expect to see these numbers change. One of the big ones that will change is obviously the lithium price not being $14,000 anymore. This talks a little bit about the SIF Funding, Strategic Innovation Fund, that we got $27 million from the federal government, announced in November. Imperial Oil came on the register in June as a 5% shareholder. They also brought in an option for some freehold land into the deal, which is common in Alberta, which allowed us to consolidate a land package in and around our Clearwater project. Looking at the cap structure, still very tightly held, 64 million shares on issue as of today, trading about a $2.40 stock price, about 150 million market cap. And I'm going to leave this with you. This is the last slide, the peer comparison. I mentioned this before. You look at our peers, you look at the values they have. We're similar projects in terms of value. We have the larger resource. You look at what the differences are, the milestones that we're about to accomplish: pre-feasibility study, pilot plant operated, contracts for offtake. So those are the things that we're working on right now.